Right. Morning, Evan. Welcome back to Morning Kappa at 8. Um, Looking at the market, right? There are three pieces of news that we learned last week. Firstly, Trump have expanded the attack on the Iran energy facilities to April 6th, which is next Monday, right? Another more important is Trump have decided to visit China, Xi Jinping, right, on the May of 14 and 15. It's going to have a US and China summit. So the market have consensus that the Iran conflict is going to have a more meaningful development or have probably it will cease right just before the 14th of May, right? So let's see, right, these 2 days how it's going to affect on the conflict between the happening right now at the Hormuz Straits. As for the Hang Seng Index remains on a bearish trajectory. You can see that the index is trading below the 20 and 50 days moving average. And right now over the week, right, the overall sentiments remain weak. However, there are a few pocket of opportunities in the Hong Kong market. As we can see, Geely 175 have went up by 11%, right? And this Zhejiang Leap Motor also rebounded by 12%, showing that the sentiment remains positive on the EV car makers in China, right? If you read some of the news that the this NVIDIA is going to rolling out their module, right? Working with the car makers around the world. Some of the Chinese brand they're actually looking at right on the autonomous driving. Right. As for the trading stocks, firstly we look at China Mengniu, right? 2319 break past 17 Hong Kong dollar last Friday. China Mengniu could be testing 18 and followed by 19 resistance. Support is 16. Then on we have Zhejiang 9863, break past 48, eyeing to test 52 and followed by 56 Hong Kong dollar. Support is at 44, right? And as for the S&P 500, right, I can see that the sentiments remains risk off so far, right? Last week, the crude oil, right, eyeing to break past the 100 US dollar, right, and right, still struggling to move above 4,005. Now, so far, we do see that the gold are still under a correction phase, right, with a very strong resistance at 4,008. Right, as for the E-mini futures together with S&P 500, right, both are showing a bearish technical setup right now. Right, over the last week, in the US market, right, we do see that oil and gas company, especially the ExxonMobil, right, Chevron, have bucking a trend, moving up, right. Strong demand anticipated on the Dell technologies. Dell also went up by 5%. Meanwhile, the memory counters like Micron, right, SNTK, right, have a very strong corrections over the week, right. As for the Malaysia market, right, utility sectors have attracted fresh inflow, went up by 2%, right, followed by energy and plantations. Meanwhile, REIT, technology and telecommunications experienced a very strong selling pressure last week. Right. As for the FKLI, we still keep bullish trading bias with our stop loss point market at 1680. Now FCPO, we also stay on the bullish bias, but move our stop loss from 4210 to 4004. Right. Now in Malaysia last week, very strong sentiment seen in Soong Medical, rebounded, went up by 27% over the week, followed by PCAM 13% and Dialog 19%. So I think these are the three most active counters last week, right? And apart from that, this week I would like to draw attention to one oil and gas company, which is Hibiscus. So last week they have paid out their dividend, post dividend payout. The stock managed to climb above 2 ringgit and 20 cents, showing that sentiment remains strong on Hibiscus. Now, most of the oil and gas company that we see in Malaysia are either midstream or downstream, but Hibiscus is actually an oil production company, right? They have a few assets in Asia as well as spend to Australia and UK, right? So they are on the upstream. They are producing petroleum and some gas as well. So next R1 will be 2 ringgit and 40 cents, and followed by 2 ringgit and 60 cents. Down support is at 2 ringgit. I can refer to our last week technical report. Today, right, we have two more stocks in our technical report. Firstly, Sunway Construction, eyeing to break past 7 ringgit. So the breakout happened, we will test 7 ringgit 30 cents and followed by 7 ringgit and 60 cents. Downside support is 6 ringgit and 70 cents. Then on, Harta Lega have jumped above 96 cents and a half on the back of high volume. So R1 will be at 1 ringgit 5 cents and followed by R2 1 ringgit and 14 cents. Downside support is at 88 cents. Okay, so we have one pending breakout, Sunway Constructions, and a breakout for Harta Lega. And I'll stop here and pass on to stage to Alex on the strategy report. Thank you.
Okay, morning, folks. Happy Monday. Thank you for joining us on RHB Morning Kappa at 8. I just want to draw your attention to a report that we published last week. Basically, it is another report in our ESG series, focusing on the G pillar of ESG, talking about how the governance re-rating potential in our ASEAN markets could be a driver of long-term value. Okay, it's a medium kind of length kind of report, regional piece. Do take a look at it. But I think just to give you a quick snapshot, essentially it talks about the greater emphasis on improving valuations on the basis of greater quality in greater trends in improving governance, right? So I think if you took a look at the Securities Commission Capital Markets Master Plan that was just released a couple of weeks ago, it speaks about Malaysia's Value Up program that gives direct policy support towards increasing governance standards. And really this echoes what regulators in Japan and Korea have also already done. So essentially what we are seeing is that companies that have a greater governance standards could potentially see a eventual market re-rating of their valuations in the medium to longer term. So to that end, the actionable part of this report tries to focus on the stocks under our coverage, where we look at companies that have a strong G score, the governance score, and then looking at their ROEs and their price to book, and identifying those companies that deserve to be re-rated. Okay, so I think we show in our screening, we show a bunch of companies across the region. I think you can see the list for yourself, of the companies that fall into this category. So so essentially, we think that this is a growing trend. And I think in the last couple of years, if you've been following our research notes, we have focused a lot on the E column environment, and now we're looking at focusing on the other aspects of the ESG spectrum. Okay, so just to highlight this report, take a look at it if you have interest in the ESG concepts. So yeah, that's it from me. Let me pass the time to my colleague Siang, who will speak about the consumer sector.
Okay, thanks, Alex. Morning, everyone. Let me continue with a sector update on consumer. This is essentially a fourth quarter sector results roundup. Essentially, if we look at the fourth quarter results, we consider the sector results as in line with expectations. Out of the 17 stocks under our coverage, 9 met our expectations, 7 disappointed, and only 1 surprised on the upside. When you get hold of our report later, then you can probably look at figure 2 for the performance of the consumer stocks under our coverage. And generally, we saw margin expansion within the sector during the fourth quarter on the back of few drivers or factors. This include the increasing scale of operations of volume, which we saw on people like Nestle, 99 Speed Mart, Mr. DIY, and EcoShop. On a favorable forex trend, we could see Mr. DIY, EcoShop, and Farm Fresh benefited from this. And easing input cost, number 3, that has driven margin expansion for people like Leong Hap and Farm Fresh. And lastly, price adjustments, which have benefited the Brewery Duo and EcoShop. During the quarter, the only recommendation change that we made was the downgrade on Padini. That's very much due to the persistent lackluster sales momentum. In terms of the key observations, as usual, I think in fourth quarter, there was a pickup in consumer spending, especially within the consumer discretionary space. This is obviously spurred by the favorable seasonality, and that could also suggest a steady consumption trend in tandem with the improving consumer sentiment. Generally, management guidance was neutral to positive, with quite a number of consumer discretionary or retail players observing encouraging sales ramp up since the start of the year. This could be a result of stronger or improving consumer sentiment. Overall, in FY25, sector revenue and profit grew 6% and 11% respectively. In terms of outlook, we believe the sector should continue to provide earnings resilience and visibility going forward, underpinned by stable domestic consumption and ongoing fiscal support. And measures such as SARA and targeted fuel subsidies should continue to support consumer spending amidst the soaring global energy prices. So all in, we maintain our overweight call. Our top picks will include Nestle, Mr. DIY, EcoShop, Farm Fresh, and Aeon. That's all from us for this session. Thank you so much for joining us. Happy trading, and we will see you in the next morning kappa at 8. Thank you.